up until this weekend, it felt like this was really a health crisis, a public health crisis. But over the weekend, it turned into an oil market crisis as well, now that Saudi Arabia and Russia essentially began a price war with the U.S. shale producers. How does that change the contours of the economic damage around the world?
Well, as we were saying, it looks like it could go either way. It's disruptive to see these low oil prices. On the other hand, high oil prices have triggered some of our biggest recessions, like the 1974-75 recession or the 1980 through 82 twin recessions. That was oil crisis time. So right now we have abundant and cheap oil, which is good news.
So, Professor Shiller, then, I mean, talk to us, though, about some of the sentiment driving this and just this general idea. I mean, you obviously, you wrote a book talking about this idea, sort of narrative economics and just narrative behavior and how it drives the markets. What really changed here, I guess, over the past 2 or 3 weeks to change the narrative enough that made people sell their risk assets to the extent that they're doing so right now?
I think that what came in the last few weeks is a narrative about the COVID virus, which suggests that this could be a record-breaking epidemic. At least in the narrative, that's what. That's because A, we have international travel, which is at a bigger level than ever before, and B, this disease is not easily diagnosable in the early stages, so that people are contagious and spreading the disease uncontrollably. You can't quarantine someone if you don't know that he or she has the virus. So that's the new narrative, and it has people really scared.
Yeah.
I think it dominates the oil narrative by a factor of 10. It's really something. And it has people wanting to hold back on spending and postpone new investing, new entrepreneurship, which is bad for the economy.
I think you put it perfectly when you said it has people really scared and holding back from anything. How do policymakers, how do organizations like the IMF, who are pushing for an appropriate response, a large response, a meaningful response, change the narrative? What is the best way to push a new narrative out there that this can be addressed and this can be overcome?
That is a difficult question. People have tried to spin new narratives from the government. Herbert Hoover is a famous example in the early years of the Great Depression, who kept saying that a recovery is right around the corner, saying that the economy is fundamentally strong and nothing has really harmed it. But it didn't work. The economy kept getting weaker and weaker. They have to do something that's credible. One thing that is credible, I think, is monetary policy, because it's widely perceived that in the last recession, the Great Recession of 2007 through 9, international coordination of monetary policy did help prevent it from getting worse. So that kind of thing, again, could work again. So I don't know that it will completely prevent a crisis, but it will lessen the severity of it.
All right. Well, I mean, assuming that becomes sort of the trajectory that we end up on, given where we are now with Fed rates right now, this would essentially mean that the Fed would actually have to do something a little bit more proactive, a little bit more aggressive with regards to actually buying assets, whether it's treasuries or even something in the risk asset spectrum. I'm just wondering, what types of measures beyond rate cuts do you think would be appropriate in this situation?
Well, quantitative easing, and they might have to find new categories of instruments to buy. I don't actually have a proposal for the Fed on what to do at this point, but I think that it has to be something that sounds creative and different. The appearances matter. The narrative matters. We have to look like there's something strong is being done for it.
Do you have faith, Professor Shiller, in the international community and in individual governments working with each other to come up with an appropriate response?
Do I have, I'm sorry?
Do you have faith, do you have confidence in countries being able to work with each other to address a viral outbreak that spans the globe?
I wouldn't say confidence. On the other hand, there is a lot of action being taken. You know, the shutting down of travel in in both China and Italy has been dramatic. People are taking strong steps. I think the United States is a bit of a laggard on this.
Still, Professor, I mean, before the fallout here related to the concerns about the coronavirus, we had seen a little bit of strength here in the U.S. economy, both in terms of consumer spending. Obviously, jobs growth was still going strong. We also saw a lot of strength in the housing market, whether it's home builders themselves continuing to put in new applications, people rushing to refinance mortgages. What is your take right now on the housing market and how it's going to be able to weather this issue that we're in right now?
Well, we were in a bubble, a dramatic boom in the stock market before the last financial crisis. And that ended abruptly with a narrative erupting of the Great Depression again. That was the last time the U.S. had a big drop in home prices. And so it came back again as a lesson learned, for a while anyway. Now the talk about housing bubble has receded just as the bubble has grown. So home prices have now reached record levels again and are, have been increasing quite steadily. Mortgage rates have been going down, and that's part of the story. But it's also part of a story of just forgetting the last lesson and under the Trump economy, feeling some vibes of strength. So people are willing to bet on houses again. This may change again, however, with the present crisis.
Yeah, I was just going to follow up and ask you, we see the 30-year fixed-rate mortgage, according to Bankrate.com, at 3.66%, of course, getting closer to those record lows. Could this be a pocket of strength? I mean, if mortgage rates continue to falter, will it eventually bring in buyers who are brave enough to come in and you know, continue to get people buying homes and bidding prices higher?
Yeah, so people are worried about stocks and they want to do something else. Buying a home sounds like a good possibility. It's not connected with the coronavirus. In fact, having a home, detached single-family home, tends to feel safer than living in the city.